All right, folks, we are just getting started. A few behind the things to check out. All right, I'd like to first welcome you to a behind the scenes look at Be the Boss of Your Money, and we are just getting started. We are live. I'm Mitch Goldberg. This is my live stream. I do this every Monday through Thursday at 4:30 p.m. It's called Be the Boss of Your Money. It's about sharing with you the lessons I've learned as a financial advisor for 31 years now. I share them with you so that you could be the boss of your money. We want to make better financial decisions. That's what the show is all about. We cover investing, interest rates, borrowing, lending, personal finance. We cover it all here. We talk a lot about the stock market, but I think that is a lot of fun. For me, anyway, it's a lot of fun. Hopefully for you. But today really is a day that we should be talking about the stock market because of the such an important earnings season. So just a little while ago, the earnings for Apple, Microsoft, and Alphabet, which is Google, just came out. We need to take a look at these. Overall, though, they were really good across the board. The stock's reactions might not be as good as you would think, but the numbers are good. And as long as the numbers are good, I think these stocks could remain the leaders. We've got a few other things to talk about, and I want to just go over a couple of companies that talked about inflation and how it's starting to work its way into corporate numbers and starting to weigh on corporate results a little bit. So we're going to roll a quick intro. We've got a couple of important things to talk about, and it's going to be a good show. Like I always say, if you have any questions, please ask me in the comments. I will see them. I love hearing from you. Here we go. We're back. I'm Mitch Goldberg. Thank you. We're just getting started. I already see a friend out there. Hey, Josh, great to see you. Thank you so much for joining me, and I really appreciate that. Love to you, my man, and thank you. So let's break out the day first, okay? Apple demolishes earnings expectations with iPhone sales surging 50%. Is the headline that just came across the news. You know what? Let's just go right to the headline. And I'll show it to you right now. Let me pop myself up on the screen here, okay? If I move myself down here, you could see the headline a little bit better, okay? Let me make the screen a little bigger so you could see it on your smartphone device. Okay, there we go. Apple demolishes earnings expectations with iPhone sales surging nearly 50%. That's not the biggest number of the day, by the way. It's a significant number, but not the biggest number of the day. But Apple, every one of Apple's major product lines grew over 12% on an annualized basis. Annual basis. Apple reports strong fiscal third quarter earnings on Tuesday. They demolish Wall Street expectations. I mean, we're talking about a blowout beat on the top and bottom line. And it's just there's no stopping them. They are earnings $1.30 earnings versus expectations of 101, $81 billion in revenue. Can you imagine doing I mean, one of these days they could be doing $100 billion per quarter in revenue, way above expectations of $73 billion, up 36% year over year. The thing is, as big as Apple is, they are growing. They're like aging in reverse. You know, usually as companies get bigger, they hit the law of large numbers and they start to slow down and kind of get into a groove that's maybe a little bit more than US GDP. And that's what keeps these companies growing and dependable, and they grow up. They grow a little bit through all economic cycles. They pay a little dividend, but not Apple. Apple is just growing like mad. I mean, these numbers are serious numbers. Service revenues up 33% year over year. Other products up 40%. Mac up 16%. iPad revenue up 12%. Gross margins 43% versus 41.9%. Just a huge, huge number. So I look, I do my best, I do my best not to be a breaking news desk. I don't really like to do that. But I think when it comes down to the market, what's going on, this is really the only story that counts. Okay. So in aftermarket trading, Apple is barely up, but you have to understand this. Apple was just at like 115, 120. It's almost 150. So they've really run up into the quarter. But remember, I said Apple's revenue, iPhone sales at 50% year over year was not the biggest number. The biggest number, the blowout number, okay, comes from Alphabet, which, by the way, is Google. Google changed their name to Alphabet. Now Google's the search engine business of Alphabet, but we'll just call it Google for now, okay? Google up $67 in aftermarket. I mean, it was down 42 during the regular session, so it rebounded from that and a little bit more, hit a high today. But Google, first of all, YouTube almost doubled in revenue. Okay, advertising revenue for Google, for Alphabet, overall, up 69%. Are you freaking kidding me? I mean, as big as Alphabet is, as much as they've eaten into and taken over the overall advertising market, their advertising revenue is still up 69%. So big beat, top and bottom line. Apple, big beat, top and bottom line. Microsoft also had a big beat, top and bottom line. Keep in mind that stock has run into the quarter. People for Microsoft are looking to see what their margins were like, how good this earnings surprise was. So we'll have to take a little bit more time to see why Microsoft is not trading higher in aftermarket trading. But the stock is up a hell of a lot this year. Starbucks had a beat on the top and bottom line. Starbucks, they had a big beat, they said, on cold drink sales. I had a cold drink today from Dunkin' Donuts. I actually like Dunkin' way more than I like Starbucks, but that's besides the point. But maybe as a seller of cold drinks, this is almost like a global warming play. I don't know, maybe not. So that was what Visa, Mondelez had a beat on the top and bottom line. We have to hear more in the conference call how inflation impacted them, because ConAgra and Kimberly-Clark, two other consumer staples names, both came out and said that inflation is going to hurt their quarters coming up. And even though they plan on raising prices, there's going to be a lag to raising prices. It takes a little while to either raise prices or shrink the size of the package, shrink the amount of stuff you get in a package to make up for the difference. It's shrinkflation as opposed to inflation, they call that. Visa, I haven't seen if Visa, if their numbers hit yet, but Visa is another one. I remember there was like 189 to 199, could barely break out of 200, couldn't hold it. And now the stock closed today at 250. It's off a little bit in aftermarket. I'm not particularly worried about it. I don't think their numbers came out yet, but when they do, we'll bring them to you. Now let's take a quick look at the overall market, how things did today. The Dow down a little bit, down 85 points. No great shakes. It's first. Dow was up like 6 days in a row, and so it's off a little bit today. No big deal. NASDAQ was off 1.2%, off about 180 points. Again, not the end of the world. A lot of that, the blame goes to the big Chinese stocks going down. China has been coming down hard on Chinese companies that are listed on U.S. exchanges, and they're just taking a very strong stance, the Chinese government, Beijing, on their companies in terms of antitrust, monopoly power, things like that. And, that when these companies, like the American companies, Facebook, Google, Amazon, when they get to a certain size, it's almost, there's a good argument to break these companies up with antitrust laws. And every now and then that does pop up, knocks the stocks down. We get past it, the stocks go back up. But in China, they just decide if it's a problem, and they just say you have to either give up marketing rights or copyrights or things like that, and stocks take a hit. Okay, so enough of that. But S&P off 20 points, no great shakes, off less than 0.5%. Gold was about flattish. Oil was unchanged. The 10-year Treasury yield is off just a drop, but still, at least it's above 1.2% as opposed to 1.12% last week. I understand that a lot of people think that there was a big short position in U.S. Treasuries, so that's why the yield on U.S. Treasuries collapsed. And it's people didn't expect the Fed to sound hawkish at all. The Federal Reserve has been slightly more hawkish, meaning they'll bring in the timing of their tightening and ending their bond buying program. They'll bring it in just a little bit, so people figure, oh, they're really going to take care of inflation, or that it's more hawkish than we expected. But the way interest rates went down is still baffling to me. And now that they're down, a lot of people thought, well, maybe U.S. Treasuries were being shorted. But it's been, a few weeks at this point. Whatever massive positions that would have been short positions, or hedge funds getting caught on the wrong side of a trade, this stuff should have unwound itself by now. I mean, if whatever is anchoring the 10-year Treasury to such a low interest rate, it should have dissipated by now, and it hasn't. The VIX is coming up to almost 20. I've been saying if the VIX closes above 20, I think we see a correction. Where do we see the correction? I think we see it in the work from home, stay at home, big tech stocks. I'm not saying that these stocks go down 10%, which is the official definition of a correction is 10%. Bear market is down 20%. But I could see some of these trillion-dollar market cap companies that have gone up so much in the last few weeks, while the reflation trade has gotten pounded, like bank stocks, material stocks like Dow Chemical, for example, reopening stocks like Southwest Airlines. These stocks have been pummeled the last couple of month and a half, 2 months. So that's what I see money going back into the reflation trade and maybe coming out of some of the tech stocks. That's just something I see. I'm not guaranteeing or you're making a promise here. Just I see that because I see the constant rotation between reopening and, and work from home, stay at home. The COVID Delta strain is scaring a lot of people. It's scaring a lot of people. Do we go into another economic shutdown? The CDC now is going back to recommending masks indoors if you live in an area that is a hotspot. I'm in Long Island, and definitely COVID Delta is definitely not a hotspot, but can't say we're not worried about it because it's so damn contagious that it could, once it gets a foothold in any locale, it spreads very quickly. It's 1,000 times more contagious than the original Wuhan COVID, right? So let's take a look at crypto. My buddy Filippo is out there. Bitcoin pump, life is good. So it's a good time to look at crypto then, all right? Thank you, Philly. Good to see you, my man. I really appreciate you being out there. Love to you. Yeah, so crypto backed off a little bit to 38. Bitcoin backed off a little bit to 38,000. Big whoop. It was just 29,000 like a week and a half ago. It's 38,000. The big news on crypto yesterday was potentially, we spoke about this, that Amazon is looking to hire a crypto payments manager. So it implied to a lot of people that Amazon's going to start accepting Bitcoin, and the whole crypto complex went up a lot. I did say yesterday, it's still speculative. It's still speculation. Amazon might come out and say, no, we're not getting involved in crypto. We're not accepting crypto. Don't get all pumped up. This is not a big deal. And that's what Amazon said this morning. So crypto gave up what they gained yesterday. My point is, if Amazon does eventually accept crypto, then at that point, it's not up to me or you to believe in crypto or not. If Amazon believes in it and they accept it, that to me is everything I need to know. And I could actually get into the whole thesis about fiat money, regular cash that central governments create. And we could talk about if they're worth it or not, if they're just on a belief system, if we're printing too much. We could get into all kinds of things. The point is, I warned everyone and said, don't get nuts with this Amazon announcement. They might not come through. They might come out and say they're not getting involved with crypto. They're not accepting it. And that's what they said this morning. So I'm just saying I'm a little bragging here that I was I brought you the news, but I was very reasoned and laid out the downside, how speculative it is, and it might not happen. And Amazon could say they're not getting into crypto now. And that's exactly what happened. Okay. I'm just, touting myself a little bit, right? Yes, Apple crushed. I would spell crushed CARRRRUSHED. So to say Apple crushed earnings. And what else? If Delta variant was as bad as they said, the airlines would not be open. Don't buy this fear. Filippo, when the shutdown happened last year and we started to come out of it, you were right there looking at the numbers for the National Transportation Safety Board in terms of number of people flying every day. And you were tracking that. You were posting about it. I thought it was brilliant. And you were right on the money. So I'm going with you. I think that most people are not that fearful of the COVID variant. Maybe we'll get herd immunity a lot quicker because it's so damn contagious, hopefully without a lot of people getting severely ill and dying. And hopefully more and more people will see how serious this is, and a lot more people would get vaccinated. I have to see the numbers. I wonder if the spread of the Delta variant is actually, if the fear of it is encouraging people to, I wonder if it's encouraging people to run out and get vaxxed. I see a couple of people watching, and I thank you all. If you don't mind, give me one of these, and I'll see your name. Maybe a heart or a wow or a caring button, depending if you're watching on Facebook or LinkedIn. I know that there's someone out there watching from YouTube as well. Thank you very much. I really appreciate you being here. We got the first one from Eric Hagen. You rock, Eric. Thank you very much. We have another one, Filippo. Thank you, Filippo. And Filippo's big in the comments. Yes, thank you very much. I love the comments. You got to hit me in the comments. Ask me anything. Come on, ask me a question. Ask me my shoe size. Come on. Ask me something. I really get a kick out of it. All right. So I think that's really about it. So I'll sum it up. For the second quarter, I know we're in the third quarter, but the second quarter earnings are being announced now. So far, of the companies that have reported, something like 88% of all companies that have reported have beaten expectations in terms of earnings and or revenues. The numbers have been incredible. And that's after Wall Street analysts raising their numbers. And companies are still beating. At some point, you have to start to worry and say earnings expectations are too high. And that happened a little bit after the first quarter. It lasted for like a week. We had a little bit of a downtick, and we started to worry about inflation. The 10-year Treasury went to about 1.78%. But ever since then, it's been straight up for the markets and straight down for interest rates on the 10-year Treasury. So I don't see anything that really contains it. If we do get a correction now or a down market, with the numbers we're getting from corporations, it's probably temporary, probably a shallow sell-off. And that's what we're looking at. Do you guys have anything that you want me to go over, anything in personal finance, anything you want me to address, or investing, borrowing, what have you? I'm having a guest hopefully next week. A friend of mine named Robert, who's a specialist in reverse mortgages. And I think that'll be a really good topic. Reverse mortgages seem to be gaining rapidly in popularity, and the negative stigma that went with them seems to be disappearing. So that's about it for today. I greatly appreciate your keeping up with the show and watching and tuning in. I'll be back tomorrow with more good stuff. And you have yourselves a very good night. See you tomorrow.